Good morning, everybody. Welcome to the Game Plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. Now, we have a big week on tap. Actually, believe it or not, a lot of earnings. We also have the PCE data later this week. But in terms of earnings, NVIDIA, Dell, CrowdStrike, Salesforce.com, all of these companies reporting later this week. And NVIDIA by itself will be a major market mover. That's Wednesday after the close. So we have inflation data. We're coming off of a week where Jerome Powell was about as dovish as can be. And while the markets have stayed strong, and we did see a rally on Friday, I keep on pointing out that he's so dovish, the rest of the Federal Reserve is so dovish, that it tells me something is amiss. They're seeing some sort of data slowdown here that they're not translating to investors. They don't want to spook the markets potentially, and that's something that I'm paying very close attention to. All right, let's get into the markets here this morning. S&P 500 basically holding steady to positive this morning, right? So if we look at the markets here, we can see that we closed right here on Friday, and we can see that we are net positive by about $1 on the SPY. That equates to about a 10-point move on the S&P 500. That's not a big move by any stretch. It's gentle float on a Monday morning here, but nonetheless, we are net positive. We're seeing NVIDIA slightly positive ahead of earnings. We're actually going to look at that chart in just a minute to kind of delve into it. All right, so again, overall looking relatively neutral to positive on the markets to start the day, but needless to say, throughout the course of the week, things could get a little wild and crazy. Now, one thing I wanted to go over today, folks, is a chart. And again, weekends for me, I still study the charts, right? I'm always studying the charts. Ask my kids, ask my wife. It's just the nature of the beast. But what I do is I look at bigger time frames, and I look for the bigger moves, right? So it's one thing when we're in the heat of battle during a day, during the week. It's like, okay, well, what is the chart saying here? What are we doing here? What's the next move? But then on the weekends, I look at the bigger picture. And I want to show you this, guys. This kind of jumped out at me. So I went back to the charts of 2007 before the financial crisis. And we know the S&P dropped about 66% during the 2008-2009 crisis. And what I found was that there are eerily identical, almost identical similarities to the charts from 07 and to what we're seeing right now. In fact, even the recent surge back up is almost identical to what we saw in 07. So what we're going to do is we're going to look at 07. Here's 07, right? So in early 2007, we had this constant grind up, right? We were seeing this grind up. Basically, if I extended this out, you would see that the market was just going like this, right? And what we saw is we saw this dip. It was about a 6% dip. We made a low. We then had our next big surge to the upside. We went all the way up. We then had an 11% drop, all right, and made a higher low. Low, higher low. We then had a replication of this monster move up, almost vertical, much like what we're seeing right now. It made a new high. Here was your previous high. It made a new high for about 3 days. 3 days. And then the bigger down move came in. And it wasn't straight down. It had bounces along the way, right? But let's look at this, and then we're going to move over to here. This is the current S&P chart. Well, here we have that same move up, 6% drop, putting in a low. 6% drop, putting in a low. We then had that next big move to the upside to a new all-time high. Essentially, at the time, it was a new all-time high. And we had a 10% vertical drop. Here we had that move up, and we had an 11% drop. We then saw that this market shot right back up. The bulls came roaring back. They just ripped this market back to the upside. Well, look at what's happened recently. Same thing. Now, what's interesting here is if this plays out identically, it actually tells us, and you can see I put the arrows in, it tells us that the S&P may make a new all-time high here. And what's so interesting about that is I'm a psychological kind of trader, meaning that I pay attention to the human psychology. That's what charts are based off of. And if you think about it, what effect would that have on the markets? Well, after a 10% drop, to make new all-time highs so quickly, the mainstream media is going to go nuts. They're going to talk about, oh my goodness, this market's unstoppable. The retail investor is going to be like, oh my goodness, this market is unstoppable. They're going to go nuts like this. And what's interesting here is you're going to basically decimate the bears. If you go on social media, the bears will be just dying off left and right. And ultimately, what we know is that that exact thing happened right here in '07 before the 66% downside move. And so really fascinating to think about what will happen if we just push up a little bit more. We're only about like $40 or $50 or points away on the S&P from a new all-time high. It's not that big of a move. But again, imagine that. We push up here, takes out this high, stops out the bears, or a majority of the bears, the weak-handed bears, and then it gets more longs to go long, thinking this market can't lose, only to see that same replication that we see over here. And just to kind of clarify so we can see the ultimate outcome, what I'll do is I'll just drag this chart over and we can see that eventually, obviously, into '08 and into '09, we can see what ended up happening, right? I mean, here was that previous high, down move, there's another bounce. But notice now you got a lower high, then down move, then sideways consolidation, down move, bear flag, down move, and it kept on going down and down and down. And so the idea is, could this be replicating this right here where we do make a new all-time high, then you get the down move and so on and so forth to the downside. So again, for me, weekends are all about studying the bigger picture. I look at gold going back to like the 70s. I look for these type of things, and you find amazing similarities in charts. And you might say, well, why do charts repeat patterns? I mean, why is a bear flag a bear flag? It was 20 years ago, 40 years ago it was a bear flag. Well, it's because it's all based on human minds, right? Human psychology. The psychology that's creating, that has buyers and sellers doing what they're doing, that creates that chart of a bear flag, that was the same in ancient Egypt, in ancient Greece, in ancient, you go to anywhere where back then it was more commodities being traded more than anything, right? That was how people were acting. And that's why charts, again, are based on human psychology and why they tend to repeat over and over again. All right. So on that note, let's flip over. I did want to go over some charts here on a pre-market basis. Take a look at this. Ooh, Pinduoduo is into a level. So I put these levels on with the traders in the room just a little while ago. Pinduoduo, this is a remarkable fall. The stock basically trading at 140, I think it was around 140 going into earnings this morning. And the stock dropping now is hitting around 112. Now, you can see I have 3 trend lines down here. I'm going to flip over to the daily chart to show you where these come from. But these are major technical support levels, okay? So I would expect a bounce off of these levels. So number one, you can see you have a little pivot down here, you have a pivot low there, and you have another pivot low right there. So anywhere between, I would say, 112 and 108, there should be, and I say should because remember, levels can be broken, but in general, you would expect this area here that we are now just kind of dancing on, that should be technical support for some sort of bounce. So watch Pinduoduo. Now, if it gets through 108, the next major technical level, and I'll have to look back on this, but I'm going to go with the 100 even number. Somewhere around here, a 100 even number would be your next level. Now, one thing I want to just show you guys, this is another good technical lesson. Pinduoduo, right? The China stock. Now, if you looked at most China stocks, Alibaba, Baidu, most of them are trading at or near multi-year lows. However, Pinduoduo is not. And this is a good example. I looked at their earnings this morning, and they beat on earnings, but their revenue came in ever so light. And when you look at this chart, Pinduoduo it's one of the rare China stocks that has actually performed really, really well. Well, what does that mean? Well, I believe it was last week, Alibaba reported earnings, and they kind of didn't do the greatest. The stock opened lower, and it actually rallied, or it might have been Baidu, one or the other. But either way, those companies, because they're at multi-year lows, the bar for earnings is a lot lower. They have to perform, but they don't have to blow the numbers away. But when you look at a chart like this, and it's up and to the right, these guys, they've priced in, investors are expecting big numbers to justify the move up, and therefore, when they beat on earnings by 30 cents, which is a nice beat, but then they missed revenues by a fraction, the stock is getting decimated by really, 20% now? I mean, it's got to be close to around 20%, if not more, at this point, maybe even a little bit more. All right, so again, good lesson to understand how important it is to look at where the chart is trading going into earnings, which brings up NVIDIA, right? So if we flip over to NVIDIA, NVIDIA has rallied sharply from the recent lows. And we could see that, again, it's not at the all-time highs, but it is up into an interesting parallel channel. Now this parallel channel, you can see what's interesting about this one is that you have your lows here and your low right here. Okay, you then take your high pivot here and you stretch it out, and you can see it was right there, then the low right here, the low right here, the high right here, and we're right into that level again. And so it's going to be really interesting. You know, on earnings when they report, my guess is you're either going to see a surge up to double top, and then we'll see what happens there. Or if we drop, it gives us a good basis for where to look for major technical support. Right around 105 to 104 would be a major technical level of support on NVIDIA. Okay, now one of the things I always try to think about is on earnings, big earnings like this, I always pay attention to their after hours moves. I know the earnings trader guys, I'm going to be trading live with them for this event. So if you're part of the earnings trader, you'll be joining us live and we'll be trading for that. But just a heads up here is that it wouldn't shock me if their numbers do beat estimates. And remember, when earnings come out, the algos are the first ones to read it. The algos scan the words, and they basically compare what estimates were with earnings, revenue with what revenue numbers are. And it wouldn't shock me to see an initial pop after hours to double top, and then a reversal back down. So just something that I'm going to be watching for. And the idea here is that, you know, the algos will react initially they're going to beat numbers, right? I mean, even the whisper number already is above the levels, but the markets are expecting that. So will the algos then push it up initially, but then when common sense prevails, will it say, wait a minute, yeah, we expected this, but then what's the guidance? Is the guidance as good? Are their margins as good as they need to be? Maybe they will be. Maybe it'll stay up here. Maybe it'll even make new all-time highs. But certainly something I'm kind of contemplating if maybe I would want to short if it gets to double top after earnings, looking for that quick reversal back down. And again, this is wild stuff, guys. This isn't for the faint of heart, right? If you're trading after hours in earnings, you're doing very tiny position sizes because the swings can be massive, and they will be. Look at Pinduoduo, great example, right? I mean, again, I actually traded that off of the earnings trader levels this morning, by the way, and I made $3 per share, which is like 3% on a day trade. I only did, you know, I think my first entry was 500 shares, my second entry was 500 shares, made like $3,000 on it, which is good. That's amazing, but it's because the moves are so volatile in that period. Pretty cool stuff. All right. In any case, guys, going to a couple other things here. I think next what I want to do, I want to briefly bring up this. We're going to do our drawing. You can see, actually, this is the website. I just want to point this out, guys, is that don't forget that the Verified Investing website every weekend is updated with lots of information, right? So, and throughout the day, we already have new articles being posted this morning. Drew, one of our top traders here, key financial events on the horizon, lays out everything for the week right here. There's me on the live feed right there as I'm doing this. Kind of weird to see myself live there, but in any case, you scroll down, lots more articles. Don't forget, I've added this to the homepage now. This is the current U.S. debt because I actually believe this is really important information to watch this stuff. The insider buying and selling is updated daily. So again, look at how much selling is going on. Most people ignore these stuff. I use this as a piece of a puzzle, right? It doesn't make me want to go all in short just because I see all the insiders selling, but it certainly is something that I pay attention to because it's part of a bigger tapestry, right? So again, all of that information. And then as you scroll down, we have our top stock charts for the week, and in fact I went over the S&P here and the NVIDIA chart. And then over here we have the Bitcoin analysis, which we'll go over in a little bit, and Ethereum. And then as we scroll down, economic charts, earnings calendar. I think this is the best part. I mean, well, not the best part, but here's your earnings calendar for the week. You can see NVIDIA after hours here. It's laid out perfectly too, so you can really see pre-market, aftermarket, and so on and so forth. And then obviously the economic calendar for the week. And then obviously we just continue down. Economic metrics are here. I did some interesting articles this weekend on a brief history of the US dollar and the Federal Reserve, kind of like summarizing. So I think a lot of people don't really fully understand when was the Fed created? What was the purpose of the Fed's creation? When was the dollar created? What's changed about the dollar over the years? Because there's been a lot of changes, not only the gold standard, but many other changes within the dollar. And just going on, we have featured shorts with our traders right here. The heat map, I mean, oh man, I could spend like all day here. The Fed Watch tool, the Greed and Fear Index, and then really this education area down here, which what's so cool about this, guys, is we're expanding it to include the Apprentice Trading Library for free, which is basically if you're a new trader or a beginner, these are going to be videos that basically lay the groundwork for you to advance your knowledge. And that's going to be all in this educational section down here, but really fascinating articles here that give you the meat and potatoes that every investor should know. All right, enough of that. Let's go on to this. Let's figure out who wins. I think Friday the Wheel of Appreciation landed on NordVPN, a free 1 year. So let's roll the dice here and see who wins that based on your wonderful comments out there, by the way. So let's see what we do right here. Excuse me. And the winner is Intiferno, and I might be saying that incorrectly, but either way, reach out to support@verifiedinvesting.com. They'll hook you up with the free 1 year of NordVPN. All right, follow me over here, guys. We're going to spin the wheel of appreciation and find out what we win today or what will be given away tomorrow. Let's see what it's going to be. Oh, nice. 1 minute scalpel. All right, guys. Amazing course. And by the way, Dr. B's working on a VWAP course, which is going to blow your mind. I can't wait to take it myself. VWAP is becoming more and more important in my everyday trading. But the 1 minute scalpel lays out all the key things that literally we use as day trading tools. It's a very, very cool course. We will give that away tomorrow. All right. Next, what we're going to do quickly, you guys know Lux Algo, one of our biggest sponsors. I have my basic algorithm, which tells topping and bottoming signals on TradingView via Lux Algo. You can go to Verified Investing, and underneath the AI and Algo tab, it's listed right there. I think it's only like $39.99 or $20, something like that. It's super affordable, and it literally tells you like sell signal right here, and it tells you a target 1 hit, target 2 hit, like all of these key metrics that help you trade. Honestly, it's what I created, so it's obviously, I like to think it's quality, and I think that's important. So again, check that out. But let's take a quick 30-second break to take a look at Lux Algo. Here it is.
Have you considered enhancing your trading experience? We have an amazing tool for you. Lux Algo creates next-gen trading indicators to help the world understand the markets in a smarter way. They have the largest user profile on TradingView and are the only official Discord partner in the technical analysis space. Lux Algo Premium operates seamlessly with top platforms, such as TradingView and Discord, making it the perfect tool for every trader. Take your trading analysis to the next level with Lux Algo. Please visit the description below and sign up for Lux Algo today.
Into the action we go, guys, right into Bitcoin here. Now, Bitcoin broke above the key pivot line. So right here's your key pivot line, right? Major pivot. You can see again how it kept on hammering on it, hammering, finally breaking above. But what do we know? If you've been following my game plans, if you know the methodology I teach, a close above is good. It basically puts you in a neutral bias on Bitcoin, but it's not confirmed yet. So don't get fooled here. It may confirm. If it confirms, you should have a very high probability of going up to 69 to 70,000. If it doesn't confirm, this level can be slipped back below, and it could be an institutional game. So just be a little cautious here. Again, I would love to say, hey, bullish, all clear signs, but per the methodology, per probability, we can't do that just yet. Today, Bitcoin is down ticking a little bit, but it has not, I repeat, has not confirmed above the key pivot line. So let's watch and see if it does. I'll update you in trading the close today here at 355. We'll see if it gets a bid and confirms. If not, I'll obviously keep you posted if it slips back below the line. All right, next up, let's jump to gold real quick here. Gold continues to push up. Gold may confirm above this range here today. So again, if we flip to the gold chart right here, we can see we closed above right here. This potentially could confirm it, this candle right here. Now, if it confirms, what it does is it starts shifting probabilities to further upside in gold versus a retrace to the low end of the channel. So I'm going to be watching gold really closely. Now, upside target based on the logarithmic chart, I gave you guys my next target. Remember, my first target was 2,500. That was by year end. We've already achieved that. Second target is going to be 2660 on gold. And again, I'm giving it till first quarter of 2025, right? I mean, I'm not going to pigeonhole myself in getting there by the end of the year, because honestly, I don't know if we will get there. But let's watch it. I think either way it goes there, it's more a matter of, does it continue to kind of trade inside of this range and then eventually go there? Right now, it's showing relative strength. And I think, again, the Federal Reserve being as dovish as they are, everyone's like, man, oh man, at least smart money, right? Smart money, like a lot of the people that are watching, you guys are watching, I consider you to be smart money because you're intuitive enough to be watching here and learning, is that smart money is saying, wait a minute, the Fed is all of a sudden flipping so dovish, we got to protect ourselves by buying some gold. And I think that continues to push the gold chart up. Plus the US dollar, we know that has broken down, but that's also smart money saying the Fed is too dovish here, something's coming. They're going to have to ease even more, monetary policy, expansion of the balance sheet, all those type of things. Silver. I still have a small position in silver, but I am getting antsy on unloading it. I'm going to be honest with you guys. Again, remember, I'm a swing trader, so this has nothing to do with long-term silver. I still like long-term silver, but I'm a swing trader, and it's getting extended. I have a big level of resistance right up here, so I'm watching closely to see if it can just get there before I think we're going to start to see economic data that could signal some problems that the Fed already knows about. I'm a true believer. The Fed already knows, which is why they've talked about cutting rates in July, and now they're so adamant about cutting multiple times into year end. Something is amiss here, guys, and I think that it will be revealed within the next 2 to 4 weeks why the Fed has been so dovish. Maybe the jobs number in a little bit. All right, lastly, guys, just a quick look at oil, which continues to push up here. I'm loving a potential short on oil coming up. All right, so when you look at a wedge pattern like this, it's already hit 4 times on the bottom here. I'm not showing it all the way back here. You usually on this, and I showed you guys this before, you usually get the breakdown after a bounce. There's a gap fill right up here, right around 77.50 it looks like to 77.75. That would be a potential short level for a swing trade on oil, and I do expect it to roll over and eventually break lower. My guess is that breakdown occurs at the same time as when it's revealed why the Fed has gotten so dovish all of a sudden, talking about multiple rate cuts and all of the stuff Jerome Powell is saying. Lastly, natural gas here, guys. Let's just jump into that. Natural gas, bear with me as I bring it up. If we look at natural gas, there we go. Natural gas continues to struggle. Again, what's fascinating here is I've been pretty much dead on these levels. We had the 786 Fibonacci, which was also a pivot point down here, right, which gave us the bounce. Beautiful upward bounce. We sold right into this area right up here, and so far it's backed off. As of now, you could say, well, is it going to go higher? Is it going to go lower? To be honest, I have no clue, but that's okay. A lot of times on a chart, when you bring it up, you're like, I don't really have a strong bias, and that's kind of what I do right now. What I do know is that if it pulls back down to this $2 level, there may be a long trade there. So I just got to be patient. Sometimes, in fact, I think I said this to you guys before, but if I look at 100 charts, I might come up with 2 of those charts that look really good for trades. The other ones are just, okay, next, cycle through. That's okay. You don't have to always find a trade. Sometimes the best thing to do is sit on your hands and not make dumb decisions where you lose money. Always remember that. That's an important one. All right, guys, I got to get going to my trading floor, but as always, thank you so much for tuning in. Thank you so much for supporting Verified Investing. Each of you guys supports us. It makes us stronger. It makes me do better. So thank you so much. Have a great rest of your day. Take care.